Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Tourmaline stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 23 billion Canadian market cap. They're trading at 64 Canadian dollars a share, and they have 351 million shares outstanding. Tourmaline Oil is a Canadian energy company engaged in the exploration, development, and extraction of crude oil and natural gas. It is the largest natural gas producer in Canada. They are the first Canadian oil and gas exploration and development company to directly engage in the liquefied natural gas business. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They didn't have much free cash flow in 2020, only 48 million, jumping up to 860 million in 2021. Then it more than tripled, up 217% to 2.7 billion in 2022, dropping 15% to 2.3 billion in 2023. And they had really strong margins. They converted 37% of their revenue into free cash flow. Last year it was 32%. Net income is the profit or loss on the income statement. It's revenue minus expenses. It was 600 million in 2020, more than tripled to 2 billion, more than doubled to 4.5 billion, but dropped a lot in 2023, 1.7 billion. They must have had a big impairment that year. Revenue is the sales for the company, and that went from 2 billion to 8.7 billion, but it has dropped in 2023 to 6.2 billion. They do pay a 2% dividend, which cost them 434 million of dividend payments for the year, which they can easily cover because you can see their free cash flow is much higher than that, 2.3 billion. We estimated 4 years of future free cash flows. We also estimated a terminal value, it's all cash flows. Past year 4, that's 31 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company of $27 billion. We divide that by 351 million shares. And we get a calculated stock price of $77. They're trading at $64, so they're trading at a 17% discount. It's a buy according to the model. But the stock should move with the price of oil. If oil prices stay above $60, $70 a barrel, they should be fine. There are 81 companies in the same industry as Tourmaline. If they have a number in red, they're worse than the median. If they have a number in blue, they're better. All these numbers are in US dollars since all these tickers are traded in the US. I converted Tourmaline's numbers to US dollars. They spent 1.5 billion in CapEx. These are the investments in property, plant, and equipment. E&P companies are an upstream process, so CapEx is a pretty big expenditure. ConocoPhillips spends the most at 11 billion. They have a really low debt to equity ratio of 0.1. For every dollar of equity, they have 10 cents of debt. Their dividend is lower than the median average. Woodside is the largest at 11%. They generate a good amount of free cash flow, 1.7 billion. ConocoPhillips is number 1 at almost 9 billion. They rank 12th in market cap. Their price to book is between the median and average. Same thing with their PE, between the median and average. They have a really good price to free cash flow. They're trading at 10 times free cash flow, which means their market cap is 10 times their free cash flow. Chesapeake Energy is number 1. They trade below 4 times free cash flow. Their price of sales is a little worse than the average. They generate 4.6 billion of revenue. Let's take a look at their MD&A for 2023. This is similar to the annual report. Here are 3 big acquisitions. In 2022, Aitken Creek for $235 million. Also in 2022, Rising Star, 191 million. Bona Vista, 1.3 billion. That was just a few months ago. And that should produce a lot of oil, 60,000 barrels of oil equivalent per day. For 2023, they produced 2.4 million cubic feet of natural gas per day. This is weird. It says for the quarter ending December 31st, they produced more, 2.5 million. This has to be a mistake. How can they produce more in a quarter than the whole year? 12,000 barrels of oil per day. 33 barrels of condensate per day, 74,000 barrels of NGL, natural gas liquids. All those numbers are up. Here's their natural gas sales, 2.9 billion for 2023. It was 5.1 billion in 2022. Oil sales is also down, 414 million, down from 450 million. Condensate is down 1.2 billion from 1.4 billion. NGL, 840 million. Total sales, 5.4 billion, down from 8.1 billion. The decrease in revenue is due to the decrease in benchmark prices, the price of oil. And they even had an increase in volume. Wow, look at the drop in oil prices. It went from 664 to 274. I knew it decreased, but I didn't realize that much. The price they sold the product for didn't decrease as much. It went from 587 to 483, a decline of 18%. Oil was still 97 a barrel, down from 102. They should be reporting all their numbers in Canadian dollars, unless they specifically say it's not Canadian dollars. Operating cash flow is pretty steady, only down 6% from 4.7 billion to 4.4 billion, $12.76 per share. Net profit is down a lot, from 4.5 billion to 1.7 billion. Profit per share is $5, down 62%. They spent over 2 billion in CapEx, a little more than last year. Most of that is from drilling and completions, 1.6 billion. They're an upstream company, so they operate in the first step of the oil and production process, actually getting the oil from the ground. The midstream companies, like the Energy Transfers, move the oil from upstream to downstream. Downstream refines the product, and then eventually it's sold to the end user. Here's their production for the last 8 quarters. They produced the most natural gas in the most recent quarter. It looks like the fourth quarter was their biggest production quarter in pretty much every category. Revenue 1.7 billion. It was highest in Q4 2022, 2.2 billion. Operating cash flow was real high in Q1, 1.5 billion. Now it's a little over 1 billion. But every quarter they seem to generate a good amount of operating cash flow. That's why they can afford their dividend payments. Net earnings was negative in Q4 2022. That's due to write-downs. It has to be write-downs since cash flow is positive. I mean, it could be stock-based compensation, but if it was stock-based compensation, it would be negative each year. Usually when there's big changes, it's an impairment. Total assets is the highest in the most recent quarter, over 20 billion. Working capital is current assets minus current liabilities, that's negative. They spent the most CapEx in the most recent quarter, 636 million. They paid a lot more in dividends, double a year ago. And shares outstanding are going up. It's 351 million, higher than previous quarters. Here's the income statement, 5.5 billion of revenue. Most of that is commodity sales. And here's their expenses. Their biggest expense is depreciation, 1.3 billion. 1 billion of transportation. That gives them net income of 1.7 billion compared to 4.5 billion. On the balance sheet, current assets 1.3 billion, current liabilities 1.6 billion. Working capital is current assets minus current liabilities. We saw earlier it's negative. So they may need to add some debt to get through the next 12 months. Total assets 20 billion. PP&E is their biggest, 17 billion. Assets minus liabilities equals equity, 14 billion of equity. They raised 8.5 billion from selling the business. They profited 5 billion from running their business. Here's their statement of cash flows. So they generated almost the same amount of operating cash flows last year, 4.7 billion compared to 4.4 billion, down a little bit, even though their net income was a lot lower. I guess they had this big loss last year, a loss on financial instruments. This could be hedging contracts, like hedging oil prices or hedging interest rates. 2.2 billion of dividends, down from 2.7 billion. They added 57 million of stock. Last year they added 189 million. Most big profitable companies buy back stock. They're adding stock. And they spent 2.2 billion of CapEx, PP&E, last year 1.7 billion. They spent 58 million of acquisitions, last year 270 million. Those were property acquisitions. Corporate acquisitions, like business acquisitions, 650 million. Last year, 68 million. Let's look at the stock on Simply Wall Street. Its last price, 65, 23 billion market cap, up 2% in the past week, up 12% in the past year. Let's see what they say about the company. Tourmaline explores and develops oil and natural gas properties in the Western Canadian Sedimentary Basin. They hold interest in properties located in Alberta Deep Basin, Northeast British Columbia Montney, and the Peace River Hill Triassic Oil Complex. They were incorporated in 2008, headquartered in Calgary, Alberta, Canada. It looks like they started trading in 2010, around 20 Canadian dollars. Then it ran up to close to 60 in 2014. It bottomed out a little under 7 in March 2020. If you had extra cash, it would have been a great time to get it. But in March 2020, most of us lost a lot of money in the market, so we didn't have extra cash. And then it peaked at the end of 2022 at a little over 80. You can see it moves around a lot. Mid 50s, low 70s, back down to the mid 50s. Now it's currently trading in the mid 60s. Simply Wall Street is really bullish on this one. They're at 142. They say the stock is 54% undervalued. 16 analysts priced this stock at 77. Their revenue forecast for 2024 is 6.3 billion, 2025 7.5 billion, 2026 7.6 billion. And their free cash flow forecast for 2024 is 1.5 billion, 2025 1.6 billion, 2026 1.9 billion. Look how low their revenue was in 2013, 566 million. It peaked at over 7 billion in 2022. It's come down to 4.8 billion. This red line on the bottom is their debt, which is a lot lower than their equity. Currently their debt is 1 billion, equity 14 billion. They were paying a 1.4% dividend in 2018. The stock came down a lot, so the yield went up to 15% in 2023. And the forecast for 2026 is 4.4%. The CEO's salary is currently 600,000 Canadian dollars. Total compensation 5 million, tenure is 16 years. Lots of insider buying in the past year. The list goes on and on. You will see one sell, but everything else is a buy. Half the company is owned by the general public, 43% by institutions and 5% by insiders. Capital Research is the biggest shareholder. The CEO owns 4.5%, then BlackRock, Vanguard, Fidelity. You see a bunch of Canadian banks, CIBC, BMO, Scotia Asset Management. Their employee count has gone up a lot from 139 to 389. And the ticker trades on the TSX, Pink Sheets, Deutsche Börse, Mexican Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.